Well, a spoonful of hot inflation data overnight makes the markets go down. Perhaps that's the jingle of the day. The Fed chair has signalled that the central bank is not in a hurry to cut interest rates because the US economy is in remarkably good shape. Welcome to the Daily. My name is Jessica Amir, market strategist with Moomoo. Well, we saw the S&P 500 fall 0.6% overnight. It was quite a bearish signal because the market closed at its low of its day. Now, this suggests that pressure could pick up because we didn't really see dip buyers able to save the day. But it is worthwhile noting that automakers did see the most selling, but stocks such as Walt Disney jumped higher on reporting stronger than expected profits. So what do you need to know now, particularly if you are holding stocks? Well, given inflation is probably going to stay higher for longer, investing in lower volatility stocks has picked up. So we saw buying in the Invesco S&P 500 low volatility ETF that saw $1.5 billion of buy orders overnight. So this suggests that investors are not overly bearish yet. They do believe that markets could be bumpy ahead. In terms of stocks to watch, Tesla shares fell 6% overnight, Rivian down 14%. That was Rivian's biggest jump since February. What's going on? Well, President-elect Donald Trump said that he is planning to kill that $7,000 500 EV subsidy. That's in US dollars, of course, and that's all part of reviewing the tax reform. Now, the potential removal of the US federal electric vehicle tax credit would, of course, hurt EV makers' sales and future earnings. But you'd think that Trump's administration will probably introduce another incentive to replace it, perhaps. But regardless, the reality is Musk actually called for the removal of government subsidies, including those on EVs, oil and gas. Now, that's exactly what he posted on X. So if you are holding Tesla here or looking to buy it, consider that the biggest EV seller in the US, Tesla, may be in a better position than others to manage without incentives. Also consider if Musk does launch Tesla's cheapest EV yet, as expected next year with that price tag of $22,000 US, it will be a real game changer. Now, of course, the icing on the cake, as we've been saying, is that Tesla could get government approval for the Cybercab service in the US now that he's in the White House, well, from July next year anyway. So what does Tesla's chart suggest? Well, the weekly chart says it could head higher over the long term. That's if you look at what we call the MACD. It simply indicates that Tesla's momentum is probably going to head higher. But the daily chart tells a different story. It could see profit taking. Tesla shares are up 124% from their April low. They hit a 3-year high this week, $358.64 on Trump's victory. But overnight, their shares were lower at $311. What else do you need to watch? Well, today, Australia's tech sector and travel stocks are on watch for several reasons. Of course, they're being supported higher because we all talk about bond yields. Bond yields have moved lower today, and that is supporting risk on and supporting buying of the dip, so to speak. Now, Flight Centre shares, they rose 3% yesterday. They're all in all up 11% off their October low. They're higher off their October low. Now, their chart does suggest that they could move higher because they're what we call oversold. Consensus sees Flight Centre shares rising up almost 20% in a year. Yesterday is worthwhile noting that Flight Centre reported that they're not able to achieve their 2% underlying profit growth for the year ahead. That's because the corporate sector is seeing slower growth and their airfares are lower as well, and that's why their profits are not as strong as originally thought. Now, yesterday, Flight Centre did say that their quarterly profits rose 2%, but they see full-year profits being as high as $405 million. That's a little bit better than the market was expecting. But do keep in mind that this company, Flight Centre, they're growing their profits about by the same tune as the average Australian bank. But they're classified as a tech stock and they could benefit from the integration of those 4 AI projects that they're rolling out, plus they're planning to roll out a dozen more. And that's the Daily.